All right, folks, guess what? I know what you're thinking. It's been a long time, and yes, it has. But guess what? We're back. So here's Fatemah again. So happy to see you. It feels like forever, right?
It does. It's okay.
Yeah.
But time flies, especially in these crazy
Well,
days.
time flies, time gets lost. I'm all over the place. Some days I feel like I'm in a total haze. No joke. Like, what? I can't even believe this is next week is the last week of September. So we're going into October. Whoa, sliding into the end of the year, right? So what's going on in your world? I know lots of things are changing.
There's a lot. So I wanted to just bring this up because right now
Yep.
the real estate market is super, super hot, right? There's some that,
Yep.
and it all depends on pricing and it all depends on the house and the neighborhood, of course. But there's certain areas where it's super hot, there's competition. People are having to, reduce their contingencies and
Yep.
possibly go non-contingent. And just want to get understanding because I think there's a lot of folks out there that don't realize that the mortgage agent, your broker, and your real estate agent really work hand in hand. It's not against each other. It's
It's vital they work together.
it's working together and it's trying to have compassion of the process. So when I've asked you in situations where can I drop the loan contingency, is it safe to drop it? And you say no. In the past, you would say it was okay, but now you're saying it's more risky. Can you just give
Yeah, let's talk about that. First off, let's talk about what we're talking about. What is a loan contingency, right? For example, a loan contingency, what it is that it's a date during which you tell all interested parties that the loan essentially is done. That's no longer an issue. So that gets signed off. But simultaneously, what it also does is that it puts the borrower or the buyer's earnest money deposit at risk, meaning becoming non-refundable. Now, what percentage of the time that actually gets enforced, that's more of a question for you. But that's essentially the implication and why that is such an important date. Because until I, the loan officer, says you cannot lift the loan contingencies, technically your earnest money deposit, which is anywhere from, I've seen from $1,000 to 3% of the purchase price, is put at risk. Then it becomes non-refundable, basically damages that go to, right, the seller for you not lifting it.
Mhm.
So today, and I hate to say this because everything's being blamed on COVID, but the truth is COVID has disrupted pretty much every industry on planet Earth, right, in all of our lives. And what it's done too is that it's recalibrated a lot of lenders. Some lenders got out of doing jumbo loans. Now, what are jumbo loans? Jumbo loans are any loan amount that is greater than your county's conforming loan limit set typically by Fannie Mae and Freddie Mac. So, for example, in our area, it's $765,600, right? So that's the amount. Anything above that is considered to be a jumbo loan. Now, with jumbo loans, they're riskier because the amounts are bigger, right? They're not really traded on the open market, much like all the conventional loans are. And Fannie Mae and Freddie Mac don't buy these loans, so they're riskier to the lender. So
Mhm.
typically, because they're riskier, guess what? They make you jump over more hoops. What's one of them? Debt to income ratios.
Yep.
The average debt to income ratio max on a jumbo loan is 43% versus 50% on a conventional, right?
Mhm.
So what I'm seeing is that a lot of these jumbo lenders are kind of changing their rules and putting on what are called overlays. Overlays are added risk measures. So for example, let's say you're buying a house and it requires a jumbo loan and the debt to income ratio is 43%, but you're bringing in somebody else to be a co-signer who's not going to live in the house. They might lower that to compensate that debt to income ratio to 36% versus 43, right? So that means, wow, you need either more income or you need to pay off debt to bring that debt to income ratio down from 43% to 36 because you're bringing in a co-signer who's not going to live in the property. Just giving you an example, they might require a higher credit score. They might require more reserves, right? All these things. And guess what? They might change the rules tomorrow. They might decide, you know what? We're not going to do 43% anymore. We're going to bring it down to 40 as an example. So if you think about the pace of change that's happening, this is why it's so risky sometimes to go in either non-contingent with no loan contingency, because then your deposit is at risk at hello, right? At the time that they accept your offer. So it could be very, very risky. So part of what you do to mitigate this is make sure that you go in conservatively, right? So that maybe you qualify for, let's say you wanted to buy a 1.5 million house, that maybe you qualify at a 40%, right? Debt to income ratio versus the 43, and taking it all the way to the limit because you don't want to risk that. The other part is that maybe you set aside some extra money to maybe buy down the interest rate, because of course, the lower the interest rate, the lower the debt to income ratio, right? Maybe you pay some money to buy a lower rate in order to bring down that debt to income ratio. So there's different strategies and everybody's different. I've always said this, loans are kind of like shoes, right? Everybody's got a different shoe size.
Very different.
Part of what you and I do is to really get into the weeds and customize the approvals, customize it for our clients, because this whole marketing thing about press button, get loan, it upsets me, to be honest, because that's not how it works. The average loan, by the way, has 23 people touching the loan. Just to give you an example of the complexity of this, it is not as easy as marketing makes it sound. Getting a loan today is very involved, especially after 2008. So much legislation was written around getting a loan.
Yep.
It's become more complicated and more expensive.
Well, I mean, the same thing with, I'm constantly strategizing. I mean, with, people think, oh, real estate's super easy. Well, there's a lot involved. I mean, it's contracts, it's negotiating.
Yeah. Just get in your car and show a house.
It's making sure that, there isn't any legal liabilities that is going to bite anybody back, anytime in the transaction or even
Well,
after.
how about the negotiation part? It's not just negotiating price. How about negotiating contingencies?
Everything.
I mean, tell me how easy that is. Look, we have parties that are interested. Look, they want to get out as quickly as you want to get in.
Yep.
But the science and the art is in between, knowing how to negotiate and compromise so that everybody's happy. You know how hard that is? For those of you who are in relationships, whether it's a marriage or not, you tell me how easy that is. Negotiating with other human beings on anything, whether it's toothpaste, what you're going to eat for lunch, a house, is not easy because everybody's got their own perception of what value looks like.
And so, I mean, I like taking risk, but it's called calculated risk.
Absolutely.
And when it comes to my clients, of course, I'm competitive. I like to make sure I could try to position myself and my client in the best possible way. And if we can't, and if it just doesn't work out because there's like several offers to a property, it just doesn't work out. And I always believe that things will happen for a reason. I always say that your right home will come and it will actually be the best home for you, and it always works out. So, what I have had to do lately is, so even if the loan contingency has to stay, and if there's full inspections where we could say, okay, we're good on the inspection, we could waive that. It's the inspection contingency. And then if there's enough sales data, like enough sales data within the offer price that we're offering to support the offer price, then I would say, okay, it's less riskier. And so,
of course,
but if it's like, let's just say, for instance, you're offering a house on your offer on a property is $1 million, but everything else is going at 950. Okay, I would say that's pretty risky. You would have to make sure that you come up with the difference. You have that money to come up with the difference. Other than that, if we're offering $1 million and there's plenty of other houses that are coming at $1 million, $1.010 million, $1.015 million, $1.025 million, then you're like, okay, most likely it's going to work. So I've been having to just keep the loan contingency, but just kind of giving, folks out there just, and also the time frames. I know that,
things are taking longer.
The lenders are getting beat up by agents, and but a lot of it is it's everything's taking a long time. So,
So let's talk about that for a second. Why is it that things are taking longer? Look, something beautiful has happened, which is, out of all this junk of 2020, something beautiful has happened. Guess what? The Fed artificially lowered interest rates. So we are at literally historic lows. What do you think that does to the psychology of a person who sees everywhere rates are at historic lows? They jump in. We have more buyers. We have more people refinancing. So let's remember, everything's a domino effect. What does that do to lenders? They get overwhelmed. Think about if I told you right now, drink this thing of water, right? No problem. You drink it, right? Now, what if I told you, I want you to drink 10 gallons and I want you to chug it? What's going to happen? it's not going to be so pretty of drinking water, right? That's what's happening, is that lenders are overwhelmed and they can't hire fast enough because this happens so quickly. They basically got caught off guard.
Yeah.
And is it easy to hire that quick? No, you got to hire competent people. You got to interview them, maybe sometimes 2, 3 interviews, and make sure you're getting the right person, because you can't believe everything that's on a resume all the time, right? So that's a process. And then they have to train them. So it's not like second one that they get hired, they're ready to do your loan. They
Yeah.
have to learn the systems, how that lender operates, et cetera, et cetera. So this has caused a major bottleneck. Plus, now let's add the appraisal side. Appraisers are driving all over the place to do appraisals. Guess what? As the lender gets overwhelmed, so does the appraiser. Why? Because the lenders are ordering appraisals. So if they got more deals, they have more appraisals.
Mm-hmm.
Therefore, the appraiser has more jobs to do. So they're taking a lot longer to do these appraisals.
Yep.
And so that's the domino effect that I talk about. So sometimes we just have to slow down, and we have to all work together and understand, not be oblivious to it, but recognize that things are in general taking longer. And so we have to have a little bit more patience. And believe me, I know it's easier said than done. I'm not a very patient person. This COVID thing is forcing me, right? It's sandpapering me right now to smooth me out in those areas that I'm weak at, such as being patient. But we have to exercise patience and understand that we're all working together as a team for the common good of both sides, right? The sellers and the buyers, because it's their lives on the line. Think about it. They got to cancel on the buyer side, they got to cancel Comcast. They got to give notice to their landlord, go get the moving truck, or order the moving company to come over, get boxes, all the logistics, and move things. It's a daunting task, and we understand it because we offer concierge level stuff. We're not in the business of, next, like a deli, that's not how we treat our clients. Our clients become friends. They're like family to us, right? So we take extra diligence to do that. But I think if we all work together, as we started this conversation, the easier it gets. But we all have to just slow down and respect one another and work together, because even both sides, the sellers and the buyers, the actual people, they're part of the team.
Yep.
We don't operate in a vacuum. It's not just you and I part of the team. It's everybody. It's the appraisers. It's the lenders. It's the real estate. It's the clients on both sides. We're all, and the agents on both sides. We're all part of the same team.
Absolutely. And I think what people understand, so you're a mortgage broker, right? So you're a
Yeah.
mortgage broker, but so they might think that you're the lender. So I think a lot of
Right.
people don't understand that your mortgage broker, even if you're going with a direct bank, whether it's a broker or someone from the direct bank, they are just that middle person, because there's everybody behind there that with the lender
That's right.
that is actually underwriting, processing, and with appraisal. So there's so many things that happen outside of you that you have no control of, and so you're with their
Very true.
of their timeline. Depending on how much volume they have, depending on where you are in the process, that's kind of how you just have to wait. So I just think a lot of
Yeah.
people just don't understand how that
They
works.
don't understand the process, and I don't blame them because it's not really taught. I mean, what high school class is there on lending
Yeah.
or on credit or any of these things, right? And that's where we come in and put these videos out and do our best to spread some education and some knowledge out there. But there's a lot. There's a lot to learn. But even the different types of lenders that are out there. We'll do another video some other time to talk about who are the players on the lending side, because I think you're going to be pretty surprised on how this is all set up. It's not what you think.
Yeah.
It's not like walking into a branch all the time where you just go and say, hey, I want a mortgage. It doesn't work that way. So we'll do another video to clarify the different types of lenders and what's the difference amongst them on a later video. But yeah, so working all together and being patient, and sometimes realizing, this is a lesson I've learned. When something is consistently not working, it should cause a little pause. And
Mm-hmm.
maybe, the universe is trying to protect you. Maybe this isn't the deal. Sometimes,
Mm-hmm.
seldom, but sometimes maybe that is the bigger truth.
Mm-hmm.
That if something is hitting the wall all the time, got to ask yourself, is my ego getting in the way from reality?
Mm-hmm. Mm-hmm.
Is maybe this property not good for me? Because we can't get fixated that one property is the only one that's ever going to be good for us. How many properties are out there? Well, not enough, I get it, but there's still a lot of properties. Maybe there's a better property for you.
Yeah.
And that's where we come in as well. Here's where we re-enter the picture and maybe have a, you know, real talk session where we talk about, look, here's what we're seeing. Maybe we should reconsider.
Absolutely. So we are here to protect you. Deposits are out there. It's not, Bay Area money. 3% on a purchase price is not cheap. So, there's a lot of moving parts.
That's right.
But if you have any questions regarding the process, I have people that ask me all the time, hey, even if they're not working with me, even if they're working with another lender, they just say, hey, is this actually right? We're here as a second opinion. If you just need to ask some questions, and just if you're in a situation that you just need some advice on or some feedback on, we're here to help.
Yeah, not we come from a place where not everything has to be about money. Yeah. We got into this business as a calling. There's job, career, and then there's a calling, which I consider to be the nirvana of the way to make a living. And we're certainly, both you and I, in that category where this is a calling for us, as cheesy as that may sound. Yeah. And part of that is just giving unbiased and nothing in it for us advice. Mm-hmm. So feel free to ask us questions, even if you have other professionals that you're already working with. We're a great sounding board. We've been doing this a long time, right? And we're honest and transparent.
And people actually have taken me on it. People,
me too.
Part of the transaction, they call me, and
I tell people, look, show me the other lender's documents. Mm-hmm. Let me look at them to make sure that you're not a victim of fine print. Exactly. Because if I say this is a great deal and go sign it, it's a great deal. Go sign it, right? Exactly. Then I'm going to do what I call my Bob program, which is beat it or bless it. If I can't beat it, I'm going to bless it and go, you know what? That's a better deal. Go get it. And I've done that many times, by the way, because I don't let my ego get in the way. Yep. I want to do the right thing. I want to sleep good at night.
Absolutely.
All right. How do people get a hold of you?
So our numbers are here on the screen, but
there it is.
You can contact me by text or call 415-756-4418.
Yep. Same with me. Text is really the best way because we're always doing something. I'm always either on the phone or Zooming. 415-368-1149. Just say, hey, Ed, I want to talk with you. Or where can I email you some documents for you to review for me? Always happy to do that. Never a charge. Always here for you guys. Mm-hmm. Well, thank you again for your insight.
Thank you.
And we will see you guys the next video. Have a great day. Stay safe and stay very, very healthy. Take care.